Hello everyone, I'm your host Shayanto and welcome to the show. The financial sector in India has undergone massive changes in the last few years and has been evolving at a fast pace from setting up of the NPCI to bringing in new laws to safeguard the economy. The financial sector has been abuzz with lots of actions from the policymakers. Such policies have had repercussions across the economy of India. In today's episode, we will explore the recent developments in the financial sector and talk about the implications in the Indian economy. And to do that, we have our very special guest. To introduce him, he is a Master in Economics from the Calcutta University and has obtained his Ph.D. from John Hopkins University in the US. He has 42 years of teaching experience and 23 years of industry experience spanning many organizations. He has also executed research projects on behalf of the Planning Commission and the Department of Science and Technology, the Ministry of Science and Technology in the Government of India. He is also a former advisor at the Center for Knowledge, Ideas and Development Studies in Calcutta. Please welcome Professor Tamal Chaudhuri. Hello, Professor.
Yeah, good morning. Good morning.
So, we would like to start off with, before we dive into such interesting developments that are happening in India, let's take a quick recap of the major developments in this sector has undergone in the last few decades. So, can you please walk us through the major milestones that India have undergone through in terms of the financial sector in the last 2 decades?
Sure, I'll be glad to. You see, when I joined the financial sector in the early 90s, uh, the first thing that we came across, which was very novel, was the Basel I guidelines. That was the very beginning, which came to be known in India as the Narasimham Committee report. And
Okay.
that's the first time when Indian bankers and all India financial institutions came to know about things like, asset quality, capital adequacy, income recognition. These concepts were not there in the past. And remember, during this time, computerization of the banking sector had just started. And you people won't remember, there were a lot of protests against introduction of
Yes, yes,
IT
yes, yes.
in the banking sector.
In the
But there was,
90s, especially, yes, yes.
yeah, there were strikes and all. Now we had to learn from the. I worked in a development financial institution, so we had to learn the terminology to begin with as to what does it all mean, what is capital adequacy and things like that. Then this was followed up by Basel II, which was where we were required to calculate what we called economic capital. And previously, in Basel I, it was regulatory capital that fixed it. Now we were to calculate economic capital. The norms of income recognition, etc., had become slightly stricter. Off balance sheet transactions were gaining traction with time. The financial market was not developed as such. The controller of capital issues were abolished in the late 80s, and companies were free to price their share prices. And there was a lot of problems in that pricing and valuation, etc. People were learning. It's not that people were consciously avoiding things;
Mhm.
they were just learning. Then, with time, what happened was that the financial crisis hit in 2007, 8, 9.
8 years. Mhm.
And then uh, Basel III came in because the regulators realized that only working with a limited capital concept and all will not work. So they came up with concepts like capital conversion buffer, you know, and cyclical capital requirements. And also, there was a major requirement on liquidity coverage. That is, the regulator wanted a certain percentage of the assets to be in purely liquid form, because the financial crisis had taught people that in times of stress, it was not possible to liquidate the assets and convert them into realizable things, because in those credit derivative structures, layer upon layer was kind of constructed. And countries Like Iceland and all even invested in such paper which they even didn't know who was the originator. They went by the names of Lehman Brothers, etc. Remember, the structures were beautiful. If at some point of time later on in some other session, if I have time, we could discuss the structures. The structures were very pretty, but the point is that people didn't understand what was going on, and
Okay.
that the mother company could collapse also. See, a AAA is a AAA till today. A AAA becoming a double B minus tomorrow is not impossible. It is straightforward. But we think that blue chip means it's forever. It's not true. Now you see, all these learnings were going on at that time. And if you see the Indian economy, and if you look at, I go strongly by the stock market indices. If you look at the movement of the Sensex or the Nifty, up to 2006-7, you will not see any movement. From 1991, we were liberalized, but the stock markets remained flat all this time. There was not much happening. If you look at our salaries in the public sector, that also took off from 2004-5. Before that, see, 14 years, nothing happened much. Because, people were trying to find out what is happening and all that. And I have no regrets. All I'm saying is that one should, it is not that 1991 bang liberalization happened and India started flying. It didn't happen that way. And last week I was in a webinar on the Sri Lankan economic crisis, and people were talking about Sri Lanka got liberalized way before India did in the late 50s. It's not very easy. It's not a very easy thing. You need appropriate institutions in place in order to play a game. You cannot just open the field up and say, okay, you people play, no one is looking at you. It doesn't work that way. Anyway, so then came Basel III in the banking system. Things got refined and all. But what gradually happened as a result of this process was that they were, as usual in every system, we didn't recognize in the past, but given the Basel guidelines, we started recognizing, and people started talking about non-performing assets and resolution from how does one recover. Now, if you want me straight sit across the table and settle with a company with a 90% haircut, all NPAs will become performing. But point is, RBI couldn't do that. And I had assets on my books which were as vintage of 1978, 1979, which had resolved in 2009. And a 1 crore loan had become, with all cumulated, had become 44 crores. Now, these people were not in a position to pay. So, quick resolution, which was the order of the day, didn't happen. It didn't happen. And even today, that is not happening. People kind of blame banks and institutions being irresponsible in lending money to clients. That is not the fact. Banks are in the business of risk.
Yes.
Question is, do we have a framework to handle that risk? You see, it is not a risk-free business. You are putting money into me. I am to service that with a certain interest. Now I have to earn it in the market. Now that is a risky proposition. And yes, maybe some mistakes had been made, I'm sure. Frauds are always there. But the way the public kind of the newspapers write about it is as if the entire banking system is corrupt. It is not true. It cannot happen. Maybe 3%. Or maybe even less than that is what goes bad. Now, what goes bad is part of the normal process of banking and lending. But defaults are part of the game. Question is, if a default takes place, do I have the backup structure to absorb that? That's where the Basel guidelines came in. So that was, and in order to fast recover money fast from clients and all, yes, the previously BIFR was there, that went away. Then came the tribunals, etc. Debt recovery tribunal came, that didn't work. Then they what NCLT or something like that, those things have come up. But whatever you do, if you can speed up the process, and speeding up the process basically means taking a haircut. You have to consciously take a haircut, otherwise it will not work. Because we have, you see, I was with a bank whose primary responsibility was in rehabilitation of sick and weak industrial units. We have tried, turned around many companies, but it requires a lot of money to handle this kind. Money means equity money in order to handle that. That is not possible for the private sector at all. So the credit rating came into existence. Our project appraisal methods became very system driven. Still there'll be cracks through which certain loans were going to fall. You cannot stop that. Now that's what the regulations were going on. Now then, the next step that happened, a major thing that happened in the banking system, was that it was realized that we need to include other people in the financial system. So financial inclusion became a buzzword at some point of time. And in order to bring about financial inclusion, small finance bank came into existence. Then, now remember, side by side, IT was developing at a fast
Yes.
pace. So you had the Jandhan, the triple Jandhan Jojana, by which you just required a mobile phone, an Aadhaar number, and a bank account. And that was a major milestone, I think, in the financial. It's not a financial reform; it is an institutional reform in the Indian economy as a whole. And that unique identity of Aadhaar has done wonders. There's no question about it. I'll give you a couple of examples as we move forward. So financial inclusion, small finance banks, the MSME sector getting a massive support and push from various sides. All these made people realize that one can leverage on technology in order to create markets. And that's where, in a big way, fintech companies entered the scene. That has been a major thing. And in order to get this bridge between traditional banking and fintech, the concept wise, the paradigm wise, you needed the NPCI.
Yes.
You needed UPI. I know India is a very confident country. It's a country which takes risks. It plunges into things, saying that we can do. Like you see, there was no reason to have a BHIM BHIM. There was no reason to have a RuPay, but we do it because we can challenge Visa and Mastercard.
Yes.
And if I go forward with your next set of questions and all what you have in this area. So if you look at the banking system development over time, first came prudential norms, Basel I, Basel II, Basel III. That's within the framework of traditional banking.
Yes. Yes.
But then with development of information technology, etc., which switched over to the digital platform. So a full-fledged digital bank concept is also in the pipeline. These are the upcoming things in the system, and Niti Aayog has a research paper on that, where they're talking about a full-fledged digital banks. And so with now we are not see, it does not mean that digital banking will lower non-performing assets. It's not that we don't require prudential norms. We require everything. But the thing is that we can include more people. We can include, migrant laborers who are moving from one place to another, have them a banking structure. For example, the COVID-19 taught us a very interesting lesson. It gave rise to a policy measure, of course. It said See, previously we had a ration card which was tagged to our city or village. Now, when
Yes.
this migrant fellows goes and works somewhere else, when everything is fine, family picks up the ration and they stay, and the supervisor takes care of them. But during COVID, when they started walking back, suddenly people realized that there is a gap. There
Of course.
should be a Aadhaar card, a ration card, which is universally. You should be being a say a Bengali. You should be able to go to Punjab and pick up your ration from there. These are learning processes, and as a matter, we didn't even have data about the extent of inter-city, interstate migration of people. We still don't have. So there are a lot of, and now you're talking about a fellow, or not fellow, lakhs of people who are moving all over the country. How do you handle them in a financial system with brick and mortar banks? You can't.
Yes.
That's where all this the leveraging on technology comes into existence. So we have moved from making the traditional banking structure strong. That learning we are putting into use in the digital banking space, and all the fintech companies, etc., that have come into existence or will come in future are is basically side by side along with development in technology. So the regulation part will realize if we are okay or not if another crisis hits. You see, unless a crisis hits, no one can know what the financial position is. RBI, it's very interesting. If you go to RBI website and if you look at the notifications, every month, every week, every day, RBI brings out notifications. The prudential norm notifications are aggregated in the month of July. July 1st of a year, the aggregated, updated prudential norm comes. And if one just goes to the notifications, you can see the work Reserve Bank of India does in the area of banking sector reforms, and not banking, financial sector reforms, and also ways to bring about a certain disciplined approach to the entire sector. So this is broadly, even when we are talking about financial inclusion and we are talking about this banking for the unbanked ones, we had concepts of small banking, small finance company, Jana Finance and Ujjivan Finance, but
Mhm.
those were brick and mortar banks. Those were not digital banks. They were just niche banks. Interestingly, late 90s, there was a move towards universal banking. That fell flat. That didn't work. That is, you don't need people to do separate things under a single umbrella. You would be bank, you would be an insurance company, you would be mutual. That model. There's a paper by guideline by RBI on that, but that didn't work. So one should mention that also in the reforms in the financial sector over the years. So prudential norms, universal banking, sharpening of prudential norms, then digital banking, fintech companies. That's the process. There are small details here and there also, like exposure norms. Can you expose yourself to a good company to a large extent? You cannot. There are exposure norms, because again, a good company is a good company up to that point of time. Tomorrow it could become a bad company. These things, I shouldn't say this, but Indians are not very much aware of these things. Whatever they hear, they see, they believe. Any company can become bad. So it's not that, but they're sold that way. I have talked to still at this age, people try to sell me insurance and mutual funds, and I tell them that, look, you better do your homework properly at least. Understand the product you are selling. Uh, Anyway, that's a different story. But today, I think we are. We have a lot of courage. We are going ahead. We have seen a lot of success, and financial transactions have become so easy these days. It's so easy.
Yes.
So
And
that's my sum up.
yes, you just talked about NPCI. So what I would like to do is for the audience, can you just tell what has been the NPCI's role, the National Payments Corporation of India? What is this body about and what are its function basically?
In this digital age, everyone can read it up, so that's not an issue. But I'll tell you, National Payment Corporation of India has been set up by, I think, 16 banks. Okay, there are some nationalized banks, there are some foreign banks, there are private sector banks, and like any other, in this structure, it is under the supervision of Reserve Bank of India. Now, this NPCI is basically, you can look at it as a railway network on which all parties can jump onto the bandwagon and they can perform various functions. Previously, if you deposited a check, when you deposited a check, it would take 3 days to get credited because the check had to physically move for clearing. There was a concept of a high value check in our banking system where you could get it credited after 3 o'clock the same day. But there also physically the check had to move. These days, when you deposit a check, it is still kind of unusual why it takes so much time. It will get credited the same day. Okay, in the second half, it does not need to be high value. You can withdraw the next day, but still it takes a little bit of time still. Now, what NPCI is trying to do eventually is that it is trying to create a railway map, like a railway map, connecting you cannot even see the threads, that it is connecting banks to each other. It is connecting your merchants and vendors to the banking system. It is connecting individuals. It is connecting the entire system to the regulator. And everything, the data is getting aggregated at various stages. So National Payments Corporation is the base on which the entire digital banking system is being conceived of.
Okay.
And it is not only the base, it is the mode of movement of transactions. You cannot have a Paytm transaction without accessing NPCI. It will get routed through that. So they are maintaining that particular framework.
Okay. So recently they launched, as you said, the RuPay, right, which is the indigenously developed payment system in the likes of Visa and Mastercard. But this has not really gone well with the American players, right? So much that the Visa has complained to the US government. So why are they so upset about it? Like, will their transactions reduce? That is the reason they're upset. And what are the implications do you see with the launch of the
Yes.
RuPay?
You see, that's where I find that the Indian economy is kind of, it's like we can do. See, no one, till such time Visa and Mastercard were the only two companies.
Yes. Mm-hmm.
They were handling all the time. They were taking a part of the risk because banks were also joining them. Database was theirs, etc. Everything. Now, India thought that why don't we have our own? The advantage of India is that it has a large customer base. The market size is very large. So even if you can catch all these people through the financial inclusion system, then you can also catch them on this bandwagon also.
Yes.
So they're saying, why don't we have the switch in the country? See, a small country, a RuPay kind of a thing will not work because the client base is not there. You will require foreign citizens to participate. But India as such is very large. So it becomes, in a sense viable that way.
Yes.
Now we are going to other countries who are, you have to know that there are many countries who are who have contracted with RBI also to set up NPCI like things in their own countries. NPCI has become a kind of a success story, a case study to take digital finance forward. And the sheer size of the Indian market makes RuPay viable. I don't need Visa MasterCard. That is, in the sense, I don't need the whole world to be my client in order to make my RuPay viable. I can make it viable through my own client base itself. And you see, if RBI tells all commercial banks to have RuPay on their debit and credit cards, banks will have to do that. It is
Yes.
not that the banks do not think that there are three options: Visa, MasterCard, RuPay. Which one do I take? RBI says you take RuPay. If you take RuPay, then I'll give you this kind of benefits you can enjoy to begin with. So having a nationalized banking system also, everything has its own merits. So that's what they've done, and obviously, because you're cutting into a major country like India's customer base, you're losing out on customers, they will complain.
But like, is there a legal reason why they've gone to the US courts? Like, there has to be
Yeah,
legal
they are scared.
and
I shouldn't say it on public television. There is a problem that suppose RuPay enters the US
oh, okay.
and RuPay makes State Bank of India issue State Bank of India card with RuPay on it to State Bank clients in New York. What do you do?
Okay, okay.
But on the other hand, I don't understand why it is not falling under national monopoly. How come Visa and MasterCard can enjoy monopoly throughout?
Yes, yes.
Why, someone can ask, no one had dared so far to have a structure parallel to Visa and MasterCard. No one did that. And they have
Yes.
done a pretty neat job so far. No question about it. But if a new entrant comes in, it's a threat. And that's why they want legal protection, I think.
So, this introduction of UPI, RuPay, how has that benefited the economy of India at a larger picture?
See, RuPay per se is a product. It will not
Mm-hmm.
benefit directly. But
Mm-hmm.
NPCI, what they have done is
Mm-hmm.
that you have opened up the payment gateways for all these companies to make digital payments. See,
Mm-hmm.
for example, BHIM.
Beam. Mm-hmm.
BA company is an Indian product, which is a similar product as Google Pay, Paytm, and all these things.
Mm-hmm.
The customer has a choice as to which payment mechanism they want to choose. It's up to the customer. Whether BHIM will stay over time or not, we don't know. But RuPay is not that.
Ah,
And RuPay it is not essentially related to your digital finance growth. It is a product which is something, a facility we are trying to provide as a competitor to
Visa
Visa
and
and
Mastercard.
MasterCard. And they are saying that we want the switch inside the country. We don't want my all database to be locked up somewhere else. Yeah, we want to have control. But that could be a viewpoint. But the point is that I can and I'm technically competent. My Indian economy is technically competent to have a RuPay like structure, shows that we have come quite a bit.
Mm-hmm.
However, it is not essential for growth in digital finance. For digital finance, NPCI, what they're doing, that is the structure. That all transactions that you see, these days, you'll be very amazed. I was very amazed to see everything. I cannot be up to date. This I learned that if you do not have a credit card, if you do not have a debit card, if you only have a bank account, then just your Aadhaar number can take you onto the NPCI bandwidth, and your bank account will get credited. You don't need a card.
Okay.
So Aadhaar linking to the payment structure has already started. So these are the upcoming. Then we are talking about your a bank account, an Aadhaar number, and a mobile phone.
Yes.
The transaction being complete by riding on the NPCI rail roadmap, and you need one more gateway, and for that you need the Paytm, Google Pay, and things like that, BHIM and things like that. This is complete. You don't need anything else. However, this is only transaction. Now, transactions are what? It could be individual to individual. It could be it could be individual to merchant. It could be merchant to merchant. It could be merchant to its own bank, individual to its own bank. So there's a lot of transaction layers,
Yes.
variety. So everything is leveraged on NPCI. And tell me, sorry.
No, I just wanted to.
I keep speaking, so I keep talking. So.
I know that's absolutely fine. I mean, we enjoy that. That's not an issue. So, what my next question was regarding this UPI. So, they have right now our UPI transactions are absolutely free, right? We don't have to, at least for the, I mean, for P2P as well as I mean, public to merchant as well. So that is happening because of the merchant discount rate, which is subsidized by the government. It is zero right now, the MDR. So how do you think that this is going to sustain? Because
No,
the government it is not sustainable model, right? So how do you see this going forward? I mean,
no, charge will come. It will come. Either, you will probably see it free when you are transacting, but it is there in the pricing of the product.
Okay. So that is only for the merchant to, I mean, when you're paying the merchants, right? A transaction between, suppose, peer to peer is not chargeable right now. I mean, even after the introduction of FPR.
I'm not even getting into the debate. All I am saying is that subsidized transactions will not work. Point is, you can still have it on face. You can say I'm doing it zero, but they are going to, suppose the government stops subsidies. Suppose the government says, you people do whatever you want. Then there'll be a competition among those gateways as to who is going to charge how much. Ideally, competition should bring down the price to zero.
Exactly.
Ideally, or there'll be a coalition among them and fix a price, taking the regulator into confidence that 1% or something we are going to charge. But then the merchant is going to jack up its pricing. At least the merchant part. Individual to individual may remain still free, because you have to understand this product has a cost. Now, how can you have a costless transaction? That is not possible, na? To encourage, someone has to bear it. So maybe to make it popular, to make it make people aware that, look, this is a beautiful facility you have. Because the moment you say there's a price to it, people say, no, I will go stand in the queue in a bank. I have time, 2 hours I'll stand in the bank, no issues. But I'm not going to pay you 1%.
That's a typical Indian mentality.
Because value of time is not that great in this country. And if you cannot stand, you make your person in your house go and stand.
True.
So but people do realize now that they realize it with ATMs to begin with, that yes, I don't need to go and stand. But there are some people who like going to the bank in the morning.
Yes, we have.
You go to any bank, you will see some people, particularly nationalized bank, they go and sit there. They chat, they meet friends, they have a cup of tea, and they come back home.
True. Absolutely.
No, that's the social fabric. What can you do? You cannot change everything overnight. I mean, as generations go by, maybe this will go down with time. But the if you make it costly immediately on introduction, people have a resistance. If you give them a little bit of
Yes.
time and see, and then gradually, but it has to be priced. There has to be a price.
With the inclusion of everyone into the banking system, one of the primary reasons was to include the lower income sector, right? And so that the government subsidies or the money that is given to the farmers or credits, they go in line. I mean, it's easy. It's easy. It becomes easier. So recently, the NPCI has been talking about introducing a concept of token money, which is the e-rupee, and like many people thought that it was the government version of cryptocurrency, but it is not. So how do you see that being a financial instrument going ahead to bring in, I mean, inclusion for the poor people? Do
You
you think
see,
it's workable?
it is not a negotiable instrument. It
Okay.
is like a gift card. When you
Okay.
see, you can go, you can go and buy a pantaloons or any other gift card and gift it to your
Mm-hmm.
relatives, who can go and then buy stuff with it. The concept you're talking about is a fixed amount that is already pre-filled, which goes to a specific customer. Okay, like a subsidy, say, and that till now it is only to be encashed once. It has to be encashed in one shot. So suppose you are eligible for a subsidy. Instead of transferring the subsidy to your account, you're given that piece of card, a gift card, which you go encash at any point of time, whatever you want, whenever you want it, within its prescribed time limit. Now they're trying to modify that and trying to say that you can actually have encash it at tranches according to your requirement.
Okay. So it
It
is
is
still in
specific.
development, or
That part is in development, but the first part is still
okay.
in existence.
Okay.
The lump sum part in one shot is in existence.
Oh,
You know,
good.
it's not a great money. If it had become a negotiable instrument, like you can buy and sell things with it, you can't do it because it's a pre-filled cash card. That's what it is.
What are the benefits of it? Like, will it reduce the
I
corruption of the middleman by a point of, or it's just another instrument?
well, you see, when I really don't see the benefit of that. So long as your bank account and other things are related, if the government wants to disburse the subsidy, you can do it directly, na?
Yes, yes, yes.
Eh. Unl- and the moment you make that a negotiable instrument, like I can do other things, I can pay other people with it also, your it will give rise to fraudulent activities. That is what they're
Mm.
worried about right now.
Mhm. So, yes, yes, tell, go ahead.
Yeah, yeah, no, it's fine.
So, before we wrap up today's session, Professor, can you tell us what policies in this sector can the RBI come up with next in the next few years? What are in the pipeline, and what kind of economic implications in India for that reason? I mean, do you see any major changes coming up in this sector?
See, the focus has been the MSME sector.
Okay.
All the developments that have happened, particularly the growth of the fintech companies, has been in the MSME sector. Like, you can get a loan, small ticket loan, you can get refinance, discounting of bills, everything can be done. There are specific fintech companies for this purpose. So the to I don't think still if whoever requires funds are getting funds. I do not
Okay.
think that is the case. As a matter of fact, I not only for MSME, I don't think even in the area of education loans and things like that, I don't think whoever wants it gets it. I don't think that's there. Idea is to do that, but you have to understand one of the reasons why what the banking system has done is that it has increased the deposit base.
Hmm.
You see, there are two parts to growth. Now, one is the investment to output ratio, the other the savings to GDP ratio. The savings part has been successful, but the investment demand is a separate concept altogether. It has this is demand and supply. Savings is supply, investment is demand. Now, there is demand not being met. That is one part that is being trying to be bridged. But there is demand, but is not being met because of other reasons. I don't think that streamlining has happened yet. There are people who still do not have access to, in spite of having everything, because there the project appraisal comes, the model comes into being, whether it's a viable business model. Those things the banks always have to look at, whether it be a digital bank or whether a fintech company, they all do due diligence. However, there are many MSME units I am aware of who do not even know that the concept of discounting bills. That has now percolated down because of fintech companies. The other major thing that is happening, let me tell you that it is not a banking system; it's a financial sector thing. Both the stock exchanges, National Stock Exchange and Bombay Stock Exchange, have something called an SME platform now. That there is BAC SME. Now, small and medium enterprises are being asked to go and get themselves listed. What you require is a website. So, but in order to get listed in the big stock exchanges, you require an IPO. In the SME platform, you do not require an IPO.
Okay.
You can just now, the moment you become listed on a stock exchange, certain regulatory disclosure guidelines comes. So if you look at a MSME unit which is in the stock exchange listed, another which is not, the public perception is that one is more transparent than the other.
Yes, that's true.
And there is a price discovery of its share prices. That helps in credit rating, in the rate of interest that they're going to get. So the stock exchanges are being encouraged to get all these units into their platform, such that a digital footprint is created. That happens in online digital business also. Acquiring clients in crowdfunding and things like that. Having a website was thought to be enough, but now having a website along with getting listed on the stock exchanges life becomes much more easier. So if you look at the steps, if you have a website, first of all you have to have a product. You have a website, you have a listing, you have all these payment gateways now. So transactions are becoming gradually seamless. And if you have a website and if you have all these other things in place, if you announce that you require funds, you can actually get inquiries from fintech companies. No one has to go anywhere anymore.
Yes, that is true. I remember opening my bank account when I got my first job. I've never visited the bank ever. Like in the last 5 years, I never visited the branch. So that tells a lot about when this development that you're talking about. It's the same thing with the companies as well.
So let us see. There's one area in the Indian financial system which hasn't taken off yet, is basically the corporate debt market.
Oh, okay.
You see, because of a very strong public sector debt market, government securities, treasury bills of various denominations, etc., the corporate debt market is still where it was in the 90s. Nothing has happened. As a matter of fact, the commercial paper CPs are also not in favor these days. So there are very few listed But still in this country, people go to financial institutions and banks for money. That is, I'm talking about corporates. That has not, it has not developed. And what has also failed is, when the SARFAESI Act came into existence, the asset reconstruction companies came, RSIL, RSEC, Reliance Capital, they all joined the bandwagon. There was a concept of security receipt. That also has not taken off. A lot of things we wrote at that time, we wrote papers and all on security, nothing has happened. So there are areas, which need a little bit, maybe there'll be some attention. Still, corporate loan market is still a banking-based market. It is not a market-based market. And with all these developments, that has not changed.
That is true. That is true. Thank you, sir. Thank you so much for your time. With that, we'll wrap up today's session. I think it has been a wonderful session to interact with you, and I'm sure that our audience at Indian Sun will surely benefit about the future of Indian economy, Indian financial sector, and also the path that we have had. So thank you so much for joining with us.
Thank you. Thank you.